Welcome to the Daily Insights That Matter. We begin today's DITM by talking about the SIP's share in the overall mutual fund AUM, which has hit a new high. Now, according to data from the Association of Mutual Funds in India, the assets in SIP accounts have grown far more quickly over the previous several years than the total assets under management of the overall mutual fund industry. The SIP AUM increased by 22% in the last year from 5.5 trillion rupees to 6.6 trillion rupees. Now, the whole AUM of the mutual fund business increased by barely 6% to 39.5 trillion rupees during the same period, which is from November 2021 to October this year. Now, as a result, the proportion of SIP's AUM in the total mutual fund assets is steadily increasing. The SIPs made up 16.8% of all the AUM in October, which was a considerable increase from the same month last year when it was at 14.8%. Market volatility is the ideal environment for SIPs because SIP allows for rupee cost averaging, investing automation, and discipline as well. Global markets have recently been known to be quite volatile, and India has performed remarkably well in comparison. The Nasdaq or the US markets have lost over 40% of their value so far this year. The Sensex, on the other hand, has increased by 4%, so that's a great contradiction. Informed investors continue to stay put and continue to do fresh SIPs even in volatile markets, knowing fully well that it is an ideal ground for SIPs to do well, and over a period of time when the market volatility is done away with, SIPs will reward them very handsomely. Now, in a bid to provide a boost to the domestic steel industry and its exports, the government has restored the status quo by withdrawing the export duty on steel products and iron ore, which was earlier levied in May 2022. Now, the centre has removed export duties on certain steel products and iron ore imposed in late May. The Finance Ministry had imposed export duties ranging from 15 to 45% on inputs for iron and steel in a move to increase their availability for domestic manufacturers. Similarly, the export duty on iron ore and concentrates was raised to 50% from 30%. The move was aimed to keep input prices under check for small businesses domestically. Now, recently, domestic steel makers had made a representation to the Finance Ministry expressing concern over losing out on overseas customer due to the export taxes. The Finance Ministry has now made the amendments as it was satisfied that the removal of export duties on certain steel products and iron ore was necessary in the public interest. Now, the removal of export duty bodes well for the domestic steel players over a longer term horizon. Global steel demand has been subdued since May 2022, which has put downward pressure on the steel prices. As steel prices in the global market are currently muted, export volumes are expected to pick up notably only when the international prices recover. However, the recent steps for removal of the export duty on steel products does provide an opportunity for domestic players to enhance their export volumes as and when the global steel prices strengthen. Having said that, even though a major uptick in domestic steel prices is not expected, a significant sector headwind on the sector collectively has been removed. So what does all of this news mean for you? The flows into SIP can be attributed to the rising interest of retail investors amid financial product awareness. This will have an indirect positive impact on you. The removal of export duty is a significant relief and a long-term positive for the domestic steel sector. This will have an indirect positive impact on you as well. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.